On April 3, 2025, President Donald Trump announced sweeping tariffs, imposing a baseline 10% duty on all imports into the United States. Key trading partners face even higher rates: China at 34%, the European Union at 20%, Japan at 24%, South Korea at 25%, and Vietnam at 46%. These measures, the highest in over a century, aim to protect U.S. manufacturers and address what the administration describes as unfair trade practices. The global response was swift and severe. Stock markets across Asia and Europe plunged, reflecting investor fears of an escalating trade war. The European Union and China have vowed to implement countermeasures, warning that these tariffs could trigger a surge in global protectionism and deal a significant blow to international trade. Economists warn that these tariffs could lead to increased costs for consumers and heighten the risk of a recession. The Economic Policy Uncertainty Index for U.S. trade has reached record highs, indicating deep unease about the future economic landscape. Specific industries are already feeling the impact. Japanese automakers like Nissan, Honda, and Toyota, which export vehicles from Mexico to the U.S., face a 25% tariff on auto imports. This development threatens to increase vehicle prices and reduce profits, potentially forcing these companies to restructure their production networks. In response to these developments, some nations are exploring new alliances to mitigate the fallout. However, the broad application of these tariffs and their conflicting objectives could lead to prolonged economic instability unless policy adjustments are made. As the world grapples with these unprecedented trade measures, the coming weeks will be critical in determining the trajectory of global economic relations.